Welcome back to another market closing live stream. I want to give a quick announcement here because it's, I think, pretty cool. Take a look at this, premiering tomorrow at 9 a.m. This is kind of exciting. I just saw this like 2 minutes ago, and it's going to be an exciting video, I think. I'm a little nervous about it, but look at this. Okay, ready for this? Here you go. CNBC's Make It channel has, and I'm not signed in because I am subscribed usually, but on this iPad, I'm not signed in here. But anyway, CNBC Make It has a video, Kevin O'Leary Reacts, living on 6 Mill in Ventura, California, millennial money. So Kevin O'Leary is going to be roasting my millennial money tomorrow at 9 a.m. So make sure to go hit remind on the CNBC Make It channel and go check that out. That's going to be pretty entertaining. Also, hashtag nervous. Okay, so let's go ahead and jump into the market and let's see what we got going on. We have a bunch of Fed talk today. I will be talking about, let's see here. One sec. I will be talking about some of the things the Fed touched on. I'll do a summary video later with some other research that I've been doing. So stay tuned for a summary video later on the Fed. Go check out that CNBC video premiering tomorrow. And then after we go through the market today and we go through earnings today, I will also be doing an interview at 2 p.m. with Peter Schiff. So with Peter Schiff, this will be my third time talking to Peter Schiff. Last time, of course, we've talked a lot about inflation, the role of government, and so on. But this time, we'll actually also talk about not just inflation and markets and market crash, but we'll also talk about the sort of what would Peter do as governor of California. So stay tuned. I think that would be a very, very interesting, or it will be a very interesting interview. Okay, let's go ahead and get started. See what we got going on in this crazy market. The first thing that I'm going to do is I really want to start with the 10-year, and then we're going to go to Webull. The reason I like looking at this 10-year so much is because really one of the things that we regularly talk about, obviously, is this coming inflation. The more society or the more markets expect inflation to come, generally the more we see the 10-year go up. We're not really seeing that, interestingly, though. We're seeing the 10-year relatively stable, which is a little surprising. In fact, if anything, it's sort of been trending down a little bit after some of our latest, latest ISM services numbers came out, ISM manufacturing. We've had a little bit of a downturn in some of these growth figures. Rather than wildly beating estimates, which were already high, we actually missed on some metrics. And when we miss on growth metrics for manufacturing or services, people do believe, and people, this would apply to hedge funds and institutions and markets. Markets do generally believe that, okay, well, maybe we're not overheating as much as we think we are, and that can often put downward pressure on the treasury yields. So let's and I did also post a video about Doge. So if you've not seen that yet, you can take a look at the video I posted about Doge. But let's for right now start with markets. We've got probably more red than green today. So let's start with the green and then we'll go into the red. See what we got here going on. So Honest Company, this is Jessica Alba's, did IPO. It IPO'd for a price of, we saw this during the course member live stream. The IPO price was somewhere around, what was our open here? 20, oh, there we go, a little bit of a Webull lag, there we go. Open somewhere around the 2162, right around there. It had a little bit of a run, but has also somewhat consolidated in the day. So it's kind of been bobbing around this 21 to 22 figure. Hasn't really seen that run beyond its initial offering, which is very, very normal. Then we've got Express is up 9.7%. Really nice momentum move here. SOS. Okay, so we're seeing some of the momentum moves come back here. SOS, Express, big momentum moves. We got Ethereum nicely over 3,400, along with Bitcoin over 57,000. GM on smashing earnings up 3.92%. Although we did have Ford up nicely and their earnings beat nicely, but their stock actually fell after their earnings. So GM clawing back nicely here. We've got Nokia, Penn National Gaming, these guys moving up maybe a couple percent here. Voyager 2.3%, Delta 1.4%, Nordstrom 1.26%. We've got Target at 0.72, Apple 0.5%. Not a lot of green in the market. I'd say overall things feel a little red still, though our indices should be up nicely. Let me see here. I think at the very least, the Dow is up. Let's go ahead and just do the quick look here. So the Dow is up about 0.3. We got the S&P 500 up 0.1. Okay, so it's actually green at the moment. It's only briefly dipped red a couple times here. Let's get rid of whatever, it doesn't matter. So very neat here. Then you've got let's do a Nasdaq. There we go. Nasdaq is also positive. So all three major indices positive here. Let's look at the Russell, barely, but a Russell negative. Okay, so small cap is negative, but the others doing well. Let's go ahead and jump back on over here into the charts. Let's see what we've got. So that was our green. Let's go see what our negative is developing. We've got Tesla down about 0.15, so pretty much flat for the day here. We've got CBOE is down about 0.1%. Yeah, we've got, we'll talk about Peloton again in a moment. We got Solar Edge down 0.25%. This was down like 14% the other day. Don't worry, Peloton's taking that spot today. PayPal does report. I'm pretty sure PayPal reports today. Let me take a peek here. So we've got earnings for today, things to keep an eye on. These are going to be stocks to watch for the next 18 minutes here as we lead up to closing. So after the market, we've got for, let's see, that's tomorrow. So let's see if we can get today. Wednesday the 5th. Lots reporting today. It's going to be incredible. All right. Let me actually get it up here. All right. Any day now, Kevin. Any day now. We're waiting to see. All right. We are going to cover PayPal, Fastly, Rocket, Etsy, Uber, Zanga, Twilio, Marathon, GoDaddy, Redfin, Fox, Bloomberg Energy, Sunrun. Woo! It's just exhausting reading out some of these names here. There's so many of them. Oh, FICO even reports. Yeah, neat. So anyway, those are going to be some of the big names that we look at here. We've got moving down towards the downside here. You do have Amazon, PayPal red leading into earnings. Enphase down again, 1.26. Started green. We actually had a lot of stocks start green this morning, and even like Zillow and some of the others, and they kind of rotated to the downside. A little bit more unfortunate, but yeah. Let's see. Okay. Okay. We've got Pinterest at also down 1.33%. Wayfair down to 270. This is getting more interesting again. Under 275, getting a little bit more juicy for Wayfair. Under 250, that sort of range gets juicy. Dogecoin's kind of rubber banding right now around 62, which is a little bit of an odd spot. It does bounce off that resistance at 69, and it's been bouncing off that, here throughout most of the morning. But lately, it did have a little bit of a sell-off, which it recovered from. Sold off down to almost 50 cents, which was a prior resistance level, albeit briefly. Did bounce off that prior resistance level. As is normal, prior resistance levels can become support. We've got EXPI, 2.3%. Etsy, 2.4 to the down here. Snowflake, 2.65. Xpeng and Matterport. Wow, Matterport down under 12 again here. It's another opportunity to buy the dip that keeps on dipping over at Matterport. Some great entry prices at $12. It's a bargain. We've got Redfin at 5.14% to the downside, which is, again, very surprising following Zillow's earnings. Zillow's earnings smashed. And as expected, though, as earnings smash, we get like this temporary green, and then the market just turns red. It's honestly kind of ridiculous. But, oh well. You do have Peloton almost at my target of 80. I did do a little bit of nibbling when the announcement first came out. Obviously, I'm down on that. I'm really waiting for 80. We are trending into that direction right now. I'm waiting for that break at 80. I feel like I'm being a little bit too impatient, and I probably shouldn't be, but I am. I am tempted to set a limit, but we're just going to keep an eye on it instead. I prefer to keep an eye on it, although sometimes I do miss it because of that. But I want to keep an eye on this, especially if we start trending down further. We got Upstart is down 9%. Upstart. Here's another trader stock that was in favor for quite a while, but that favor has really sort of evaporated. So let's see. We've got Skills, a 9.57, Ocugen, 9.27, Affirm, 9%. Moderna's down 7.54%. Quantum Scape. Moderna could be down because of the what's it called? The CDC guideline or heads up that came out. Take a look at this. Watch this. Let's just go to Bloomberg.com. Oh, they had it as headline. Now it's not anymore. Okay, where was it? CDC. It was literally the first story here. There it is. U.S. COVID cases could see sharp decline by July, which is obviously very, very good news, but leading to potentially this belief that, hey, maybe we don't need as many vaccines as previously thought, as vaccine uptake is declining right now. Which is not so good for the vaccine manufacturers. I do want to open a larger position in Moderna and Pfizer at some point, but I'm really waiting for the vaccine bump to wear off. I'd love to get Moderna under 80, 90. I know that sounds crazy, but seriously, the vaccine bump has pushed these stocks to the moon. So I wouldn't be surprised to see a nice buying opportunity at Moderna and Pfizer, if, of course, you believe in the mRNA technology. Many people do not, and that's okay. You know, in my opinion, this is my opinion. My opinion is it's somebody's personal choice as to whether or not they want the vaccine and or not. But anyway, for those people, I suppose it doesn't even matter if you take it yourself or not. But for those people interested in the mRNA technology, messenger RNA technology, Moderna and Pfizer, I mean, this is if imagine there are no side effects, long-term side effects, which is obviously the hope for these vaccines. These could be revolutionary technologies that have the potential of fighting cancers, ailments, disease. I mean, really, really incredible science that goes into the messenger RNA. Now, again, long-term side effects, TBD. But anyway. All right. So, so we're not going to devolve this into politics. Don't worry. Let's continue to focus on the sticks. But I did just want to put my theory out there regarding Moderna because it is one that I'm paying attention to. Okay, so Voyager Digital sitting at 22, BTC up nicely, Ethereum, good. Rocket Mortgage 1.8%, Faraday Solutions sitting at 11.7. We got Churchill Capital sitting at about 0.5%. Really down from what it was this morning. I mean, this morning you had CCIV up like 4.5 to 5%, and you really saw a sell down in a lot of the stocks that were rallying this morning. Yeah, generally I do like staying out of pharmaceuticals, but I'll tell you that mRNA technology, if it just continues to prove, I think there's some real opportunities there. So we'll see what happens. Still waiting for Peloton to break under 80. Hoping to see that within the next 11 minutes here. We'll see. Okay. What else do we have here? When's Peloton? I think reports tomorrow, not today. Yeah, Peloton's tomorrow. Peloton earnings. Which Peloton earnings, if they give a weak forecast, you could definitely see another decline on Peloton tomorrow. So there are going to be plenty of opportunities to go shopping, I think, here. Reports Thursday, yeah. All right, so while we wait for sort of the sticks to continue to evolve here, again, waiting for Peloton to drop under 80, although it just did rebound about 0.25%, darn it. Let's go jump on over to Bloomberg again. Still sitting at that 1.57 on the 10. Let's go ahead and see if we can grab top news. See what we got here. All right. Reddit traders, GameStop wins now include S&P credit line upgrade. Okay. Peloton. Yep. We saw Peloton. Talked about Fed. Gensler. The Gensler SEC. Let's take a look at this. And the Rensor. That's interesting. Let's take a look at the Gensler. So the SEC chair sent his strongest signal yet that while trading in GameStop could lead to new rules for online brokerages and firms that dominate the business of executing stock orders. Ooh, new rules for Robinhood maybe. In its most substantive remarks since taking over as the Wall Street, or his most substantive remarks, since taking over Wall Street, the regulator last month has recently, this is such complicated verbiage. Sorry. Gensler, the dude running the SEC, said popular trading apps encourage retail investors to buy and sell more frequently, something that can trigger, he said it, lower returns. The SEC chief also raised concerns that a deluge of customer orders are being routed through a few massive players, which he said threatens healthy competitions. Or healthy competition. This is slam at potentially Robinhood and Citadel and Virtu financially up there. Citadel, yeah, there's some big issues. Take a brief look here at the rents soar. Rents are soaring across U.S. cities while as the economy rebounds, squeezing the budgets of tenants who are already facing increased eviction protections. Decreased eviction protections. We did have a ruling today, which is expected to be countered, but a ruling today that the eviction ban would just be immediately lifted. That is being fought in court, but it does open the door for a lot of people to get evicted potentially immediately. So, I might want to circle back to this one, but pay attention to that. We've talked before, by the way, about an eviction crisis potentially happening, where essentially there's a flood of evictions and a lot of people getting kicked out of their homes who have been in them since COVID and potentially not fully caught up, especially now with landlords being asked to take haircuts on rent forgiveness or to forgive portions of rent. Evictions might become a viable option and something that we see a lot more of if that rental eviction protection is lifted, which tentatively right now it is lifted. All right, looking back at the sticks here, we've got Wynn Resorts, 2.5%, National Bev Corp, 1.78, Nordic American, 1.52, Ford's up 1.68, kind of along with GM 4%, nowhere near as strong. Biggest momentum today seems to be towards the downside with Ocugen, Peloton, BTX. You got these momentum stocks selling down. The momentum stocks here being Upstart, Affirm, Playboy, Skills, Ocugen, and BTX, all of them down. Some of these down 8% here, like Upstart, Playboy down 8 to 9%. You've got Peloton obviously down on that recall news with earnings coming out tomorrow. So we'll see. A big thing that might come in earnings tomorrow is a ratio of how many people do they actually expect will take the recall, because I guaranteed, pretty much 99.9% guaranteed. Yeah, you could pretty much guarantee that not everybody is going to want to return their Piton. There are going to be a lot of people that are like, look, I don't have kids, I don't have animals, not worried about it. I'm going to keep my treadmill because I like it. And so, what happens if you get 80,000 people like that and only 45,000 people taking advantage of the recall? Well, then the 125,000 is not as big of a deal. So, all right, let's see. Let's listen in here for a moment. Say, touch on the Fed a little bit.
They're trying to ease financial conditions and try to bring 8 million people back from work.
But that is not lower and lower and lower mortgage prices is not going to bring waiters back to their jobs in tourist destinations. You know it. I know it. Everybody at the Fed knows it. And everyone on Wall Street knows it. So it's getting more and more absurd. I'm not saying it can't continue for a while, but the areas they're stimulating are not the areas that actually need the stimulation. And the jig is almost up. So maybe that's why we have companies beating earnings by 100% and not going higher. That's just my guess.
All right, well, you mentioned GM. I think we should hit that because shares are getting a pop after reporting much stronger than expected Q1 profit. Phil LeBeau will hit it for us. He's got more.
We're going to pull off the talk about GM. I do want to listen to this. Market turns a bit jittery on Bloomberg and kind of relates to what we just heard here on CNBC with why are earnings beating and the market not moving?
In the United States, vaccine distribution has really picked up in the United States. We're seeing declines in COVID. It's still obviously dangerous, but COVID is priced as some sort of enduring forever problem in some parts of the world, some parts of Latin America. Europe is coming around on this now. And so very big differences in the growth outlook still being affected by COVID. So first off, non-US, even if you take a look at the same industry groups, if you were to take a look at industrials or energy companies, all of these things, with the exception of pharma, you find that they're more cheaply priced outside the United States. Then we also, again, still have some cyclical recovery plays that are just about coming out of the cycle. Real estate is our sole other overweight in the U.S. market. And there are big differences in parts of real estate, but it hasn't had a complete recovery. 30% improvement in U.S. share prices since the end of 2019. If we take a look at real estate, down 3%. So there's still more, if cyclical, if temporary, there's more to come in terms of the real estate recovery.
That's interesting, though. And I'm curious, though, if you are sort of at all concerned about some of the pressures coming here, I guess you can maybe pin it on Washington if you want with regards to the inflationary pressures, fiscal pressures, and all the stuff in between, Stephen.
Well, I think, again, some of these issues we've seen before and are really not part of the lasting inflation outlook. Doesn't mean that we won't have some lasting tilt-up inflation, which we expect. But the commodity price pressures that we've seen and that you can see riddled in the earnings reports at the early stages of production, simple commodities have risen very, very sharply in price. But take a look at 2010. We saw even more commodity price pressure 12 years ago when we were coming out of that particular recession and we had a decade of disinflation.
Yeah.
So I think, again, you'll hear from policymakers what really, really matters. Are we going to exceed supply side ability of the economy to produce in a lasting way? I think these U.S. fiscal policy developments where we're matching spending with new taxes really don't argue for a lot on that front.
Stephen Whiting on a day where we see lumber up another 4%. We've seen remains Arabica coffee up almost 7%. That inflation pressure somewhere in the commodity space. Stephen Whiting, we thank you so much, of Citi Private Bank. Guys, we head towards this close and still clinging. The S&P 500 basically only up 2 points now. It's big tech that is your laggard, Taylor, and it's sort of been a choppy day with plenty of headline risk.
And what's interesting is you're not sort of seeing that classic follow through within the bond market. Typically, as we've been talking about, when big tech is starting to sell off, it's because yields are rising. Technology has lately been seen as that long duration asset. When you talk about the cash flows, we're not seeing that. Bonds indeed catch a little bit of a bid from yesterday and today as we got that clarification, of course, from Janet Yellen, Romaine, yesterday.
Well, it's interesting, though. You are seeing some investors, though, go a little bit longer here on that duration, both in terms of the equity market as well as in the treasury market and in the credit market. You're seeing a lot of calls sort of in that space that maybe it is a little bit safer to inch out a little bit on that duration curve, and that some of the, all the people pulling their hair out on the fact that the Fed might actually move sooner than later. Maybe that's a little bit overblown. All right, we're not overblown. We're moving closer here to the closing bell. Full market coverage right here on Bloomberg. We take you to the bell and beyond.
And I will take you to CNBC for the bell.
See forever.
Oh,
you have to
that button. Oh, they're on commercial. Fine then. Fine. Then we'll go on over here to Webull. Which, remember, get 2 free stocks with Webull when you sign up for this platform, Webull. They will give you 2 free stocks when you deposit $100. All right, let's see what we got here. Going to the bell. We did not get $80 Piton, unfortunately. I was really hoping for that because I wanted to plow some dollar hollers in here. Only did a little bit of nibbling today. Did want to plow into this at 80, so we'll have to keep an eye on it. Hey, maybe I'll get my opportunity with earnings. So we'll take a look at that. We've got Express, nice momentum play, up 10.3%. Most momentum plays are just getting wrecked right now. But SOS and Express doing very nicely here. Penn National Gaming up 2.24%. Win 2.71%. NGA. We look at this. The vehicle companies barely moved. We had a nice movement this morning, and as we saw, everything sort of recovered very nicely this morning. And things just rotated right back to the red. And a lot of that recovery, or a lot of that push we saw this morning on talk about potentially a $70 billion deal coming to electric buses, somewhat evaporated here. We're just up about 1.5% on some of these stocks right now. We've got United Air up 0.8%, Desktop Metal up 0.4%, Target up 0.35%, Squares sitting around 231, up 0.25%. With the bell should be here now. How come it's not? Oh no, hold on, the bell.
Pull back 0.3%, just continuing the streak we've seen, Wilford, for the Nasdaq.
I barely got that. Barely got that bell. Woo!
The Dow, remarkable split of performance in that regard. Welcome to the closing bell, everyone. I'm Wilford Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. The Dow closing just 20 points, 30 points or so above its recent record closing high, up 0.3%. S&P just above the flat line. Nasdaq well off its earlier in the session bounce, down 0.4%. And the sector performance of the S&P speaks as well to that difference in performance in the headline indices. Energy, materials, financials, the best performing. Energy in particular up 3.3%. Utilities, real estate, consumer discretionary at the bottom of the pile. Investors are now set for another busy hour of earnings. Results from Uber, PayPal, Booking Holdings, Etsy, Zynga, all about to be released, and we'll have instant analysis when the numbers cross. Jeff Brown from Ritholtz Wealth Management still with us, and Delano Sapporo from New Street Advisors joins the conversation. Mike Santoli, to you first. And
I'm pulling up earnings as well.
As we've been touching on, clearly not particularly encouraging. It is, in fact, utilities and real estate at the bottom, not just the tech names, though clearly tech giving up some gains.
Yeah, I mean, there's just been a little bit of slipping of the gears in this rotation we've seen going on for a while, and it's pretty eclectic in terms of what has been working and what's not. You know, we talk about it being very cyclical, but the pure, traditionally defined, so to speak, reopening plays are not really what's in demand right now. Airlines have been weak for a few weeks right now. So same with things like hotels. So it is much more about global reflation, consumer spending boom. That stuff is still holding up. The rest of the market is kind of has the blahs at this point in the last few weeks. As I say, it's a collision of relatively fully invested investors as a group with, passing by the catalyst of very strong earnings, because maybe the real good news seems to be priced in, and we maybe are seeing a little bit of the peak of improvement in the overall macro data.
And there's this fierce debate about inflation, and we saw a lot of action in the bond market today with some of the inflation break-evens hitting multi-year highs. Delano, how do you position for that as a stock market investor, whether you think it's transitory or not?
Okay, here we go. Redfin is in. Redfin earnings in. Redfin revenues beat estimates. Q1 comes in at 268 versus 253.3 expected. Good beat. Sees revenue. Whoa, the forecast is really, really good for Redfin. Q2 revenue was estimated to come in at $348 million. Actually comes in at 446 to 457 million. However, had to be some bad news. Redfin Q1 loss comes in at 37 cents per share versus 31 cents estimated. So a slightly higher net loss, but a good beat on the revenues and big forecast guidance upside here. Okay, Booking Holdings just came out with a loss of 1.34 cents per share, loss of 55 million. We have Q1 revenue at 1.14 billion versus the estimate of 1.16. Slight miss, coming with an adjusted loss per share of 5.26 versus the estimate of 5.97. So the loss was slightly lower than expected. And they had 99 million nights sold through their website with an estimate of 99.3. So slight miss there on the revenue, slight miss there on nights sold. So Redfin, we'll see how that's doing in just a moment. Waiting for Etsy, Twilio, Uber, Fastly, Rocket Mortgage, PayPal, and some others here. So we're going to keep an eye on them. I want to see how Redfin's moving in the after hours. Okay, Redfin's up in the after hours. We're up about 3.7%. But honestly, who cares? Who cares that it's up 3% in the after hours when the darn thing just gave up 5%? I'm telling you, these companies are freaking awesome. So, you know, when Redfin gets a big beat, folks, what happens after a big beat in this market? The stock crashes. So that's actually really good and very, very, very good guidance there for Redfin. Really happy about that. Let's listen to what they're saying here about the Nasdaq while we wait for some additional earnings.
This quarter, the first quarter of 2020, it was closer to 15 billion. Now, when you dig into that, you see that delivery gross bookings will be 10.7 billion. That's versus 3 billion in the first quarter of 2020. So the deliveries business tripled and really, I would argue, saved the share price and saved the company.
Oh, Uber is out. Hold on. Let's hit Uber here really quick. Okay. Wow. This is a long list. Okay. Hold on. Here we go. Uber Technologies. Oh, gosh. Come on. Delivery gross bookings at 12 point. Oh, stupid thing. Come on, Bloomberg. Just give me the numbers. There we go. Okay, gross bookings came in at 19.54 versus the estimate of 18.07. That's a beat. Revenue of 2.9 billion revenue for Uber. That's different from the gross bookings, obviously. The estimated loss was only 6 cents compared to 60 cents of an estimate. That's actually pretty good. Way lower of a loss. Loss per share of only 6 cents for Uber. We've got delivery gross bookings were 12.5 billion. Mobility gross bookings were 6.8 billion. So obviously a lot's there on like the Uber Eats is presumed here. Monthly active platform consumers, 98 million monthly active users. Monthly active platform consumers spent about $66 per month. Active drivers and couriers on platform reached 3.5 mil. We've got, let's see here, freight was 301 million. Freight revenue, 301 million. Okay, I didn't know they do freight. That's cool. Uber announces results. Okay, loss. Yeah, that's 6 cents. That's actually pretty good. Uber's bookings climbed 24% on growth on strong delivery numbers. Really, really good. Let's listen to CBC here while we listen to or look for some other earnings.
Deirdre Bosa with the numbers. Deirdre.
Yes, on the bottom line, but the top line requires a little bit of an explanation here. It was a miss, revenue of $2.9 billion versus 3.3 expected. The company.
See, I didn't even get that headline. That's why they needed the explanation. Thank you.
In the UK relating to classification, that reclassification, excuse me. So gross bookings may tell the story of recovery a little better, reached an all-time high.
The Fastly CFO just announced that he's stepping down. Fastly CFO stepping down. Rocket Mortgage comes in with an adjusted EPS of 89 cents versus 90 cents expected. That is a revenue miss of 1 cent. Etsy reports a net of 143.8 million. We've got that gross revenue of 550.6 million. That is a beat of the estimate of 530.4 million. So a good $20 million beat on Etsy. Folks, you want to hear what's smart about Etsy? Although maybe it's not because it's worst case scenario, right? Okay, Etsy says Etsy isn't issuing guidance. I don't know. The market could look at that both ways. Probably the market's going to assume the worst on that one. But Etsy, folks, that's a good beat. But when they don't provide guidance, stock tends to go down when you don't provide guidance because people, again, assume the worst. And remember what happened with Pinterest. Remember what happened at some of these other consumer discretionary companies. Waiting. Okay, new numbers coming in now. Okay, here we go. Wait, sees Q2 revenue. Oh, they're not giving full year guidance. Okay, quarter two revenue guidance just came in. Okay, so Q2 revenue guidance, the estimate was for 493.7 million. That was the consensus estimate. They're actually coming in with Q2 guidance of 493 to 536 million. That's a good number. That's actually really good guidance. So they beat estimates. They're not giving full year guidance, but they are giving Q2 guidance. That just came through. Etsy's EPS came in at $1 versus an estimate of 97 cents, which is good. So we beat estimates. We beat the top line. We beat the bottom line, and we beat the Q2 estimate, but we are not getting Q3 and Q4 guidance. I wonder how. Let's take a look. Let's see how the market decides to react. Okay. Wow. Redfin beats and already gave up all of its potential gains in the after hours. Like, this is that kind of market. You beat and the stock goes down, folks. Get used to it. Yep. There you go. Etsy. And I was this close to buying Etsy the other day, and I'm like, no, Etsy, I'm going to wait until we go under 175. Boom, it just happened. We are at 174 as Etsy falls 5.2% on beating earnings, beating net, and beating quarter two guidance. We fall 5% because it totally makes sense. Oh, man. Zenga.
What the street was looking for, but adjusted revenues coming in at 720 million. The street was closer to 686 million, so that's a beat. Daily active users also beat, coming in at 38 million. And also
Zenga beats
6 million.
They'll be giving up that 2% in a couple minutes.
110 million. The forecast was 695 million, and for the year, they're now looking for 2.9 billion in adjusted revenues versus an expectation of 2.84 billion. They also announced an acquisition here, buying Chartboost. It's a mobile advertising and monetization platform for about $250 million in cash. They say that's going to close in Q3. Remember, heading into this report, this stock was down about 20% from its most.
Twilio just reported. Twilio beat. They came in with 590 million versus the estimate of $533 million, reporting a loss of $206 million. My goodness, it's a big loss. A loss per share of $1.24, adjusted EPS of 5 cents, and the estimate was for 10.3 cents. So we'll see how Twilio's doing. Rocket Mortgage did have the slight miss. Fastly had a miss. PayPal, if you miss, you plummet. If you beat, you fall. That's about the theory here. Waiting on PayPal now. Waiting for PayPal. And let's see. Uber losses. Okay, CNBC. Uber loses dramatically. Uber losses dramatically improved thanks to sale of self-driving unit. Oh, Uber sold their self-driving unit too. I remember Lyft sold it, but I didn't know that. Uber also sold their self-driving unit. So both Uber and Lyft do not have a self-driving unit now. Very, very interesting. Okay. Then we have Twilio. Yeah, Twilio beating estimates. That was good. Redfin beat nicely. GoDaddy beats. GoDaddy report Q1 EPS of 6 cents, but the consensus was 32 cents. So the net number was not so good. But we saw a slight beat on fiscal year forecast. And let's try to see what the revenue is here. Hold on. Let's listen. Oh, Etsy. Now they're coming at Etsy.
Reporting $1 per share. The street was looking for 88 cents. Revenues 551 million. That's above the 530 million analysts were expecting here. They're giving us a second quarter revenue guidance. So that is the current quarter. It is above consensus. Also guiding gross merchandise sales to grow between 5 and 15%. Again, just in the current quarter, basically saying there's so much uncertainty, it's hard to give guidance beyond that. The company says consolidated gross merchandise sales, GMS, was 3.1 billion. That's up 132% year over year, but about in line with what the street was expecting there. They do say the Etsy marketplace acquired approximately 16.3 million new or reactivated buyers, but you can see here the stock is sharply lower, I should say, and after hours down by nearly 6.5%. Yep. We'll see what they say on the call. But interestingly, the word mask did not come up once in the press release. And before, that had been a very big product selling on the marketplace earlier this past year. Back over to you both.
Now I think it's Mother's Day gifts, which are apparently doing very well on Etsy. Courtney Reagan, thank you. And Will, for just another example of a company with blowout results here. I mean, it's hard to really find anything wrong. And the forecast is for their GMS, which is a good measure of sales, to rise 5 to 15%. Remember, they're lapping the lockdown quarter. So that represents growth, even if you go back to look 2019 versus 2021. Some good color in these Etsy results. It was a good time to be a seller and to be a buyer. 81% of the sellers identify as women. 92% are sole owners. 97% operate their business from their homes, and 44% of the sellers started their business in the past year because of COVID-19.
And yet shares down 7%.
It's been a huge winner. So a lot factored in there. Josh Brown, Delano Sapporo, thank you both for joining us this hour. We appreciate it. Up next, we've got more reaction to Uber results as we count down to the company's conference call, which begins in just a few minutes. Plus, Hilton shares under pressure today after the hotel operator missed Wall Street's earnings estimates. Coming up, the company's CEO on those results and when he expects business travel to recover. That is a wild card. We're back in just 90 seconds.
They call them moonshine.
All right. So welcome to the inflation disaster market is the way I like to call it now. This is what happens. Everybody's panicking about inflation. I really like Etsy around these prices. So let's kind of look at some of the fallout here. Hold on. I do want to see if PayPal. No, PayPal's. When's PayPal? Well, let me see. PayPal. Did they report? Let's see. Oh, 4:15. Okay, PayPal's coming out in the next minute. Okay, ready? Ready for PayPal? All right, let's go. Should be out any second now for PayPal. Standing by for PayPal. And I will have my, look at this, folks. I got the perfect coffee cup for this. See this? Yeah. Buy that dip. All right. It's 4:15. Where is it? Where are the PayPal results? We're waiting. Inflation Nation. That's right. Everyone's panicking. So the market seems to sell off inflation, but look at the 10-year again. The 10-year just slipped even more. It's at 1.567 or 1.569 right now. Still, it's just like, it's so stupid. It's such a stupid market, but I love it because it's giving me some 10-year up. There we go. PayPal total payment volume coming in at 285.4 billion versus estimates of 265. So total payment volume higher. Adjusted EPS coming in at 122 versus the estimate of 1.01. That is an adjusted EPS beat. Revenue beats. Revenue comes in at 6.03 billion with an estimate of 5.88. That is a beat. PayPal is raising guidance. This is very good for PayPal. So far, that's a beat across the board on PayPal. Let's see if PayPal gets rewarded a little bit better. So, no. PayPal at the moment down 1 to 2%. I don't get it. I honestly, like, it is just so abnormal. It's so weird. It's a triple beat. Triple beat. And it's red. It's trying to go green. It's about to go green, fortunately. There we go. There we go. This is whatever market. There we go. Okay, now we just went green briefly for a moment. We are green about 0.25% here. Maybe people haven't heard the news yet. But this is great. I mean, this is a triple beat. So, okay, there we go. Now we got the green candlestick. There we go. 1.5%. Okay, now it's a little normal. I was just early. I was very early. So that makes more sense. Total active accounts, 392 million. We've got payment volume expected to grow for the year. Trailing 12-month payment volume surpassed $1 trillion. My gosh. PayPal sees 2Q or second quarter adjusted EPS about 5% growth versus estimates of 2.11%. Very, very good. Adjusted EPS for the year to be around 470 versus estimates of 465, providing full year guidance on a dip. Here we go. Now comes the beating. But we already knew this for like the last 2 minutes, and then we saw red candlesticks, and it's like, what? That doesn't make any sense. Okay, PayPal now up about 3%. So had you bought when I first mentioned it, you would have been up about 3% right now. But I wouldn't be holding my breath because this market is giving up after our returns like they're candy on Halloween. It's a disaster. Fastly down 12.4%. Does not help that their CFO, their financial officer, bailed out. Rocket Mortgage down 9%. Etsy's down 6.81%. Redfin's down 3.52%. There's blood everywhere. A quick reminder. Tomorrow at 9 a.m., which I think will be really fun. Where is it? Oh, no, never mind. Not sure why it's not showing up. I do just want to mention that tomorrow at 9 a.m., CNBC Millennial Money will be having Kevin O'Leary react to my Millennial Money on their channel. So if you have not yet, I encourage you go over there and hit the little remind button on the live. If you're when you're signed in on whichever account you're using, there's usually a little remind button. So check that out. Hit that remind button. Love to be there. And I'll see what it's like. I have not seen it yet. I have no idea. I'll probably get roasted. Also, what else do we have? We have that coupon code expiring today. Get that 49% off using the coupon code link down below. If you want to sign up for campaign alerts, go to meetkevin.com/support for campaign alerts. If you want to be the first to know about any potential announcements, go to meetkevin.com/support. And so stay tuned. All right, let's go. Let's take a look back at the sticks here. Take a look at the sticks. PayPal finally moving 3.3 to 4%-ish, starting to consolidate a little bit on the candles here. We've got Square 1.16%. Also, remember that in 40 minutes, I will be live with Peter Schiff to talk about his ideas for governing California, if he even thinks California is fixable at all. And I'll be sure to ask him some new questions on inflation as well, which will be fun. So somebody's saying Doge is hurting. Let's take a peek at the Doge. I mean, Doge's having a little bit of a, it's been consolidating since it hit 69. It's kind of been consolidating a little bit. So we're seeing that. Copy link in chat. I could probably do that. Let me see if I can do that. Jack, should I wait? When should I buy more stock? Should I wait for a big dip? Look, the market's going to keep, in my opinion, we're going to keep seeing these dips. I personally have got a chunk of money waiting for a big dip as well. What I'm looking for isn't so much in these individual stocks. It is, I'll show you exactly what I'm looking for. All right. So, because I've been nibbling, and of course, anytime I nibble, I send out alerts on the things that I'm nibbling in. But this is what I'm looking for, folks. This is the S&P 500 over the last year. What I'm really looking for is a V to the downside, like we had right before the election and like we had in September. That's what I'm looking for. I'm looking for some of that froth to get out of the S&P 500. I believe there is a very good chance we will see a nice V-shaped dip in the S&P 500. We're already starting to flatten on S&P growth right here. I'm not sure if we'll just stay flat or if we will see a dip, but I'm personally hoping for a dip either here in May or in June before we start getting more positive data coming in July, August, September, October, which is, I believe, when we'll see that longer-term inflation starts trending down again. We've got bad news coming in the next couple months. So I would expect as that bad news continues to escalate, we might see a downtrend, maybe get back to S&P 3,500, something to that effect. At that time, I would love to load the boat on some of my faves because I do think there's a good chance some of my faves will be even lower than where they sit today. That's entirely possible. But yeah, it's hasn't happened yet. So we'll see what happens. We will see. Otherwise, I'm mostly standing by. I have been doing some dip buying, but I have not done a heavy buy in a while. I've been waiting for some more juice, and I've got some firepower waiting for that juice. So keeping an eye on some of our faves here. Let's see here. Redfin's down 2.27. Etsy's down 7 right now on a triple beat. Etsy's down, just not providing that full year forecast is leading the stock to sell off. Let's take a listen in here for a moment, see what CNBC has to say.
Thanks for joining us.
Good to see you, Sarah. How are you doing?
Okay, I thought the headline from your call was that you saw you're seeing record travel leisure bookings this summer. Can you give us a little more color?
We are. I think if you think of the first quarter, it was sort of a tale of two cities. January and February were still quite challenging, but in March, we really did hit a point of inflection and things started to improve materially. That's continued into April. We're early in May, but we see that trend continuing. On the call today, I was pretty optimistic. I'd say very optimistic in the sense that this is as good as I've felt since the pandemic started in terms of where we are and what I see in forward-looking trends and bookings in the business. It's at the moment, as you heard a lot about, being led by leisure. In fact, this summer, we think leisure will be over the record leisure numbers that we experienced in 2019, pre-pandemic. And business travel, while it's lagging, is coming back. It's probably about half the levels that we saw, at the prior peak. And group and events are lagging that, but they're coming back. And what we see is as offices and businesses are starting to reopen offices, and expectation of in the fall kids going back to school, people start to travel for business again and they start to congregate in meetings. In fact, if you look at markets.
All right, he's excited about sort of a rebound here, hyping up the recovery here in the hotel space, which makes sense. A lot of folks questioning how these folks' debt loads are going to survive. We shall see. We do have PayPal here holding on to that 3.7%, also leading Square slightly higher, which is great. Matterport recovering 0.5%. Not much else happening in the aftermarket, with the exception of the losses that we saw after great earnings, as usual, and the win there on PayPal. PayPal providing that yearly information, and I think that's really what Wall Street is looking for, is that year data. We are at 1.57% on the 10-year Treasury. Let's give a brief listen into Kudlow, and let's see what Kudlow's got to say, if anything.
Stay with this other side of the break.
Nope, Kudlow's leaving. Okay, they're all leaving. Let's then go to Bloomberg.
We're driving breakthrough innovation with 3-year strategic product plans, but we're also looking.
Yeah, Zillow down 7% on beats. I know it's a stupid market.
Navigate really,
but it's a great time to buy
out of the system. So when these input costs start to shift on us, you anticipate and you're prepared for that. And that's why when you look at our margin profile, since 2018, we've expanded our gross margins here roughly 1,100 basis points. In this past year, during the pandemic, we picked up roughly about 370 basis points of gross margin expansion. So what we're about as we look to the future is really, consistency on the top line, margin expansion, and really driving good growth.
Talking about good growth, talking about rainy days, Jessica, what an extraordinary time 2020 was. And I know that you looked at it from a philanthropic endeavor in terms of donating millions of wipes, millions of diapers. You've got advocacy for women. But I think of you and your story when you talk about being born to hardworking Mexican-American family, parents working multiple jobs. You know how difficult it is to parent. And, well, your price point.
I'm going to pull off this here on the Honest Talk. I do want to, somebody here is asking, how do you buy? Yeah, that's Jessica Alba's IP. Somebody's asking, how do you buy after hours? Webull actually lets you do that. Remember, go to metkevin.com/Webull. They give you 2 free stocks worth up to $1,850. But yeah, like, for example, if we wanted to buy right now, we could do that. All right, let's take a peek here. What else? So Fox sitting around. We've got, let's see what CNBC's got to say. Listen in over here. Oh, still Hilton.
Time it has connected the world more. It has sped the world up. And while certain trip occasions are replaced, others come in that are higher value trip occasions for business travel. And so, hey, time will tell. We think the evidence is there. We think, both over a long span of time, and the evidence is there in the early days of what we're seeing in recovery.
Chris, update us in the US where you are on wearing of masks outside of hotel rooms themselves, of course, in public areas.
All right, we're going to pull off that discussion. Yeah, so it looks like things are mostly stable right now in the afters, with the exception of those companies that reported. Most companies beating earnings here, and still getting spanked by this market. This is certainly been a brutal 2.5 months, and currently there's nothing showing that or nothing indicating that will slow down, especially if we top this off with an S&P correction. Then you get some real beauty come into the market. Entirely possible. So I would say stay tuned for the market. Definitely leaving some cash on the sidelines, not diving into margin at all, and still leaving more cash on the sidelines. If you want to catch up on some fundamental analysis, or you want to learn some perspective, check out the amazing programs on building your wealth linked down below. That coupon code does expire tonight. And remember that in 32 minutes, I will be live with Peter Schiff. Let's see what he has to say about the future of inflation, markets, and California. Thanks for watching, everyone. We will see you in the next one.